After another week that saw small caps continue their relentless bear market and blue chips continue their bull market as Dogecoins run around without leashes, and as we await a week filled with huge earnings calls for many major companies. Well, with all of that in the forefront, many are asking just what, Charlie, are the top 3 stocks for this week? And as we continue with the slump in the small cap market, my goal is to do 3 things. Number 1, give you short-term catalyst plays to trade off of. Number 2, sharpen your conviction on long-term high conviction plays. And number 3, give you some diversification tactics to take advantage of this market. But of course, let's go ahead and start with some updates from last week. And I'm trying to be healthy today, so I just have water, no caffeine. So Workhorse popped up 15+% at highs on Friday after a prominent analyst upgraded it and made a case for a $20 price target. They argued that Workhorse will be beating most of the competition to the market and has a great opportunity to gain early market share over the other companies. If you recall, Workhorse got beat down after being denied the USPS contract a few months back, and this analyst firm made the case that this is a great buying opportunity. But outside of that, on the other hand, Workhorse received a purchase order for 6,320 vehicles just in January, and they'll be starting to deliver those in July 2021. They also have a backlog of a total of 8,000 vehicles with additional orders from UPS, DHL, and Pritchard companies. It's certainly possible that UPS and DHL enjoy the savings that are garnered from adopting EVs because it's lower cost to operate, and as a result, over the long term end up expanding those EVs with Workhorse, but we're not going to count on that just yet. Now, from a shorter term perspective, if you're looking to scalp moves in these catalysts ahead of time, keep a careful eye on what drops in the pre-market. I briefed on this Workhorse catalyst about 30 minutes prior to market open because I saw this analyst upgrade, and this is the value of scoping out what's happening in the pre-market. So even if you're not longer term some of these plays, if you're scoping out the pre-market and you're tracking the catalysts, when the catalysts run, you can take advantage of them. Not all catalysts run, but the point is if you could find enough catalysts and you could track the ones that do run, you could have a good game. But in terms of trends, you're starting to see a lot of analysts come out of the woodworks and basically endorse a lot of these high growth stocks that have been beat down. Okay, Bitcoin and Ethereum and other currencies are showing weakness over the weekend as Dogecoin rallied into new highs. This marks Bitcoin's first test of resilience, so it's earning a much higher level of institutional adoption since January. This sell-off over the weekend wasn't really much for Bitcoin compared to its historic sell-offs, but I think we're going to learn a lot by how resilient it is. Definitely expecting a bad week for Mara, Riot, and crypto stocks as a whole. Just like crypto stocks move 2-3x what Bitcoin moves to the upside, they also tend to deplete 2-3x to the downside when Bitcoin is falling. No problem there though, Mara and Riot have always historically been teases. Generally speaking, we'd all be jumping for joy at the concept of any crypto weakness, but of course in the context of the market condition right now, it's a little bit less exciting. Another dip to test our conviction. Charlie's brain wants Bitcoin to sell off a lot more so that we can get heavier discounts in Mara, Riot, and the likes. But Charlie's heart is like, more dips? Oof. Just being honest, sometimes you have to acknowledge the emotions of your heart, but also acknowledge as traders, sometimes our brain has to go against our heart. But anyways, now it's time to talk about the top 3 stocks for this week. And the only thing I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Also, quick plug, if you'd like to learn how to trade, would like access to our private chat, as well as our daily morning briefings where we brief on what exactly is happening each and every single morning. Well, I'll put the link to ZipTrader U below, but I would say that one of the more overlooked focuses of ZipTrader U is its dedication to building confidence despite market condition. I think the reason that stock market programs tend to be more popular during bear markets than bull markets is because a lot of people don't realize how important risk management is until you get into a situation where everything starts tanking. A lot of people will talk about news and the latest things happening in the stock market, but a lot of folks don't really realize that they need help reacting to things in real time and having the confidence to know that that reaction is the correct one. So if you find yourself struggling with your confidence in this market condition and you think you might want to join us, make sure that you commit first to yourself that you're going to watch through every single lesson. You're going to read through each and every single morning briefing. You're going to paper trade, which means simulated trade, and you're also going to participate in our private chat room. But I will put the link below if you want to check it out. Yes, I switched back to coffee. None of this water stuff. So our Clove play got short squeezed on Friday, up over 30% at highs. This was the second time this happened in the last couple of weeks. And much like we said last time this happened, this instance as well is likely to be a short-term catalyst. But over the long term, they're not going to be able to hold Clover down. Despite short seller allegations against Clover being completely ridiculous in my opinion, and something that any early stage company like this would experience, short sellers have still managed to make an insane amount of money off duping individual investors in this stock. They've managed to systematically gaslight investors into thinking that this company is worth nothing. And they've been aided by the overall direction of that sector of the market. Yet while Clover the stock has plummeted, Clover the company has been chosen by the Centers for Medicare and Medicare Services in 10 states. It's won a 5-year NIH grant for advanced care study. They just hired the Trump administration Center for Medicare and Medicaid Services director. Their entire leadership team comes from either a successful tech, healthcare, or insurance company, or all three of those. And its damn general counsel is the former deputy general at the U.S. Department of Health and Human Services. Clover Assistant has offered superior gross margins than the average benchmark. The company also plans to increase its membership nearly 5-fold this year as a result of the new federal program meant to lower costs for Medicare and encourage risk sharing. And these are just a few highlights. You're starting to see that despite short sellers' best efforts to push this down as close to zero as possible, the value is starting to push through. And the more that this happens and the more they fail to crush it down to that $0 level, the less valuable it's going to be for short sellers to continue to pounce on it. So for short-term traders, you're going to continue to see these short squeezes over the next couple of weeks and months. And for long-term traders, you're going to see this valuation come out the other end looking ridiculous. Even the average analyst, and analysts hate high growth stocks. Even the average analyst thinks that this is trading way too cheaply. So something to think about, folks. Okay, NIO, one of the earlier entrants into the small cap bear market, actually has some pretty exciting news coming out. While NIO has positioned itself gracefully as a leader amongst luxury EVs in China, just a few days ago, NIO said that it's going to be announcing its plans for expansion into Europe on May 6th and 7th. This introduction is going to be in Norway, similar to how NIO's competitor XPEV started their expansion into Europe. EV companies are infatuated with Norway because its rate of EV ownership per 1,000 people is like 4.5 times higher than the next country in Europe, which is Sweden. They have huge incentives there for citizens to buy EVs, and the citizens there also want to buy EVs and they have money to do it. So you have a huge winning combination. And by entering the favorable market in Norway, Chinese EVs see that as a Trojan horse to enter the rest of Europe and move on to Sweden, Netherlands, Germany, and eventually expand to the rest of Europe, which in total is the second largest market for EVs behind only China itself. We also briefed that NIO confirmed a battery swap partnership with S&P or Sinopec, which operates over 30,000 gas stations. This partnership with NIO is a big stinking deal because that means that NIO can expand out its battery swapping station to Sinopec, whatever spec stations across the massive Chinese market. We were also talking about how NIO is expected to unveil its updated power plan next week in Shanghai, including an update to its battery swapping technology, amongst other changes. So certainly an exciting time for NIO. The other thing that I wanted to talk to you about in terms of this is that EVs led innovative tech into a bull market at the end of 2020. It was first EVs like NIO that ran, and then everything else followed. And likewise, NIO and the other EVs led the rest of tech innovative into a bear market back in February. NIO started selling off a few weeks before everything else started selling off. They were on the early side of both waves. And I think that investors are going to start seeing that of all the sectors of innovative growth, EVs are the ones that are the most obviously undervalued. Yes, they're high multiple, but you actually see proof of concept every single day in the making. And people are going to start looking past that chip shortage as the market is forward looking, and they're going to be looking towards the end of 2021. They're going to be looking towards early 2022, where NIO and all of the other EVs are going to be starting to get back into that bull market. So I think that EVs are likely going to be the ones that lead the rest of innovative tech out of the bear market whenever that happens. Okay, lastly, I want to talk about one of our diversification plays, one of the ones that we've had as a price target for a while, but also one of the ones that I want you to pay a little bit closer attention to this week is American Express. It's looking to test a breakout, and we've been talking about credit card companies as an opportunity in terms of consumer spending and economic reopening and the likes of that. But on the channel, we've pretty much been focusing on Visa, which is another good play, but also be aware of American Express. They are going to be reporting their earnings on Friday. Are they going to be providing really, really strong guidance for summer and fall? Do they agree that consumer spending is going to take off and that's going to cause a massive rise in American Express and Visa and other credit card companies? American Express's projection for themselves is going to represent what's going to happen to Visa as well. The rising tide is likely going to lift a lot of these credit card companies, and I'm very excited about that. Okay, lastly, I want to talk to you a little bit about earnings. Earnings are something that we've always talked about in our briefings, and I always make an emphasis on them because they're strong catalyst plays. You can play pre-anticipatory reactions and post-reactions. Some of the ones that I want you to know about this week are Monday, we have IBM, Coca-Cola, and United giving their earnings. Tuesday, we have Abbott and Netflix. On Wednesday, we have Anthem, Las Vegas Sands. Healthcare really boomed last week. Las Vegas Sands is a recovery play, which is likely going to have some interesting guidance for summer and the end of the year. Wednesday, we have Next Era, which is one of the small caps that got beat down. We have we have Discover Credit Card. Thursday, we have Snapchat, AT&T, American Airlines, Southwest, Seagate, and Friday we have Honeywell and Amex. Now, in terms of the airlines, I'm really looking forward to seeing how they're reporting guidance. We're starting to see a lot of bookings tick up, and I'm interested to see what they're going to be projecting for summer and fall. But that's not a full list, just some of the more notable ones. But anyways, folks, if you have any questions, feel free to reach out to us in the comment section below or join us on ZipTrader Circle. If you'd like some free stocks when you deposit with Webull, they are an excellent broker for new traders. So check them out if you are broker curious. We accept everybody at ZipTrader, broker curious or not. But if you are broker curious, you might as well pique that curiosity by going and checking out Webull. Anyways, folks, that caps off the video, and I'll see you in the next one.